Students, welcome you all once again on the fourth lecture on Ind AS 116. So students, we have covered a lot of concepts in detail in Ind AS 116. And in the last class, we have also discussed the lessee accounting in the books of the lessee, where we have discussed what is the meaning of right of use assets, right? What is the meaning of, so how this right of use asset is going to be measured at the time of initial recognition, how this right of use asset is going to be measured at the time of subsequent recognition, and we discussed that depreciation is required to be provided on right of use asset, right? If a purchase option is there and it is reasonably certain that the lessee will purchase the underlying asset, then depreciation on right of use asset has to be made as per the economic life of the asset, as per the useful life of the asset, right? But if the exercise price or purchase price option is not there, then the asset has to be then ROU asset has to be depreciated over the lease term, right? So we have discussed the accounting in the book of the lessee in detail. Friends, now today we are going to discuss one of the critical concept, which is lease modification, right? So normally, if there is a complexity level in the question paper, then probably the question will be asked from the modification section, right? From the modification section. If I summarize that what I'm going to be cover in the next 2 days, I mean to say today and day after tomorrow. So basically 5 concepts I'm going to discuss. Number one, lease modification. Number two, exemption with respect to right of use asset. Number three, lessor accounting. Number four, sublease concept. And number five, sale and leaseback concept. These 5 concepts are remaining as of now, right? So today we are going to start our discussion with lease modification. Good morning, Salesh. Good morning, Tanisha. Good morning, Rahul. So let's start our discussion on the lease modification. What do you understand by modification, friends? What do you understand by modification? So lease modification means, for example, you have entered into a lease on 1st April 2021 for a period of 6 years. So this lease will expire on 31st March 2027, right? And when you have entered into a lease agreement, you have already decided that, okay, I am the lessee, you are the lessor. I will be paying a consideration of 20,000 rupees per month as a lease payment. And these are the lease terms and condition. And I am using your 10,000 square feet of space, right? I am using second floor. I have taken a second floor premises, right, which is covering, let's say, 10,000 square feet of area. So everything was clear on the day one, right? And in the next 6 years, on the every second year, there will be a lease payment escalation of 10%, let's say. So this is how this entire lease has been structured. This entire lease has been structured. Now, what happened after 2 years? The property rentals, after 2 years, the prices of the property has been increased like anything, right? So let's say when the lessee enters into a lease agreement with the lessor, the price of that floor comes out at 1 crore rupees, right? And lessor agrees to provide that property on a rental basis for 20,000 rupees per month with a escalation clause of 10% after 2 years. But after 2 years, the prices of the property has got doubled. Now this property has become, from 1 crore, it become 2 crores, right? So the property rentals have also been increased. Since the property prices has been increased, property rentals has also been increased, right? So now the lessors are saying, see, the property rentals have been increased like anything. The prices of the property has been shoot up like anything, right? So now my property value is 2 crore. If I'll charge a rental of 20,000 rupees, it means I'm just taking a 0.001%, okay, 0.001% from you. which is not a even reasonable return on my investment. Okay, so the lessor has told that uh, even you can, if you want to move out from this space, I'm okay, right? If you want to vacate this building, I'm okay. Otherwise, you have to increase the rental at least by 25%. Okay, so this 25% was not factored. This was not foreseen at the time of entering into the agreement, right? And when the lessor and lessee entered into the agreement, when the at the commencement date, the lessee has done the right of use asset accounting, and while doing the right of use asset accounting, the lessee has considered present value of future lease payment, and these future lease payment has been considered considering the 10% escalation of in substance fixed payment, right? Considering the 10% escalation. Now after 2 years, suddenly there is a 25% increase which is demanded by the lessee. And I am telling you, this is not a theoretical scenario. This is happening nowadays in Gurgaon. This is happening nowadays in Noida. The landlord or the lessor does not go by the lease term. They are asking for a higher escalation in comparison to what was contracted in the lease agreement, because they know that the property prices has been shoot up like anything. The property rental has also been increased like anything, right? If the lessee will not be ready to pay, of course he can vacate the property, and the new tenant will of course pay much higher in comparison to the earlier tenant. Or even this tenant, if this tenant will vacate the property, even he will not get the property at this value, he will get the property at much higher value in comparison to this value, right? So friends, when this modification was not factored at the initial contract at the time of commencement date, right? This change is considered as a modification. This is the example of change in the consideration, right? The second example could be, for example, I have acquired 10,000 square feet of space, right? Now after 2 years, due to my business expansion, so let's say in that second floor there were 4 rooms available, right? Out of those 4 rooms, 3 rooms I have taken on lease as a lessee, and 1 room was still in the possession of the lessor. Now, since my requirement has been increased, and now I am telling my lessor that please give me this fourth room as well, right? So, of course, the scope of the lease has been increased, right? The scope of the lease has been increased, area has been increased. So, this scope has been increased, right, friends? So what is meant by modification? Modification means a change in the scope of the lease or change in the consideration of the lease, right? After COVID, like the companies which are already having a possession of 3 floors, 4 floors, right? What they have done? They have reduced the area. They have reduced the area. I was working in HSBC Bank 9 years ago, and at that point of time, they were having 8-story building in Sector 45 Gurgaon, Sector 44 Gurgaon, right? So after COVID, they have just surrendered that building of 8-story, and they have acquired a smaller space of only 2-story building somewhere near Cyber City. So you can imagine this 8-story has changed to 2-story. Okay. So the point is, so in this case, it is a change in the lessor also. But normally what happened? So if you are increasing your existing area or decreasing your existing area, or if there is an increase in consideration or decrease in consideration, this is known as a modification in lease. And when it is known as a modification, when it is not inbuilt at the time of inception or commencement of the contract, at the time of finalization of the lease terms and condition, this was not part of the original lease terms and condition, and hence it is known as the modification. Hence it is known as modification, right? I hope it is clear to all of you. Lease modification you all have understood, friends. Lease modification you all have understood. Lease modification means a change in the scope of a lease, like increasing the area or decreasing the area. A change in the consideration of a lease, like after COVID, the lessor has decreased the lease rental, or at some times the lease rental has been increased, like I have told you in case of in case of increase in the property price, that was not part of the original terms and condition of the lease. If it is part of the original terms and condition of the lease, you have already been factored while calculating present value of future lease payments. For example, adding or terminating the right to use one or more underlying asset, or extending or shortening the contractual lease term. Third example of lease modification could be like nowadays airline companies, what they are doing. There are engine issues which are going around, right? So what these airline companies are doing, they have existing leases. So they are extending the lease, right? For example, they have a lease term of 10 years. So they are extending the lease by 5 years. So this is again known as a modification. Okay. Or for example, there is a lease contract of 10 years. A company has taken a premises on a lease for 10 years. Now they are expecting that, earlier they were expecting that they will use this space for 10 years, but now they are expecting that no, we will not use this space for 10 years, we will only use this space for 6 years, right? So there is a shortening of lease term, or there is an extension of the lease term. This is also known as a modification. So there are three kind of modification. Number one, change in the scope of the lease. When I'm saying change in the scope of the lease, means increase of underlying asset or decrease of underlying asset. For example, from 2 floors, the company has moved to 1 floor, or from 2 floor, company has acquired one additional floor. That is the scope of the lease. From 20,000 rupees per month lease rentals to 25,000 or 15,000. This is known as a consideration change. Third, from 10-year lease term to 15-year, or from 10-year to 6-year. This is known as a change in lease term. So change in scope, change in lease term, or change in consideration, right? Which was not formed part of the original terms and condition of the lease is known as lease modification. So we all have understood the meaning of lease modification, right? Now what happened whenever there is a lease modification, then either it will be a separate contract or it will be an adjustment to the new contract. You all agree with me? You all agree with me? Friends, do you agree with me or you don't agree with me? First of all, you understand whenever there is a change in the scope of the lease, change in the consideration of the lease, change in the lease term, this ROU and lease liability accounting needs to be revisited, right? If your future rental is increasing or decreasing, of course, it will impact your right of use asset and lease liability, because earlier you have this lifetime lease rental on the basis of the original terms and condition. Now you have to revisit the new terms and condition, right? Your lease liability and ROU asset will undergo a change. So friends, whenever there is a change in the lease term, whenever there is a change in the lease terms and condition, whenever there is a lease modification, either it will result in a separate contract or it will result in an adjustment to the existing contract, right? Now question arises, when it will result into a separate contract? Friends, if there is a change in the scope of the lease, right? For example, from 10,000 square feet, the lessee wants 15,000 square feet. The lessee wants 5,000 additional space, right? 5,000 additional space. So this is a case of increase in the scope. From earlier it was 10,000 square feet, now it is 15,000 square feet, means 5,000 square feet extra. Friends, when you see the commercial contract, all commercial contracts are generally on a per square feet basis, right? Whenever you see the contract in malls, contract in retail space, office space, generally it is on a per square feet basis. For example, for 10,000 square feet, the lessee is paying 50 rupees per square feet, right? So what is the total lease rental? 50 multiplied by 10,000? 5 lakh rupees. 5 lakh rupees. So the lessee is paying a lease rental of 5 lakh rupees. Okay. Is that clear? The lessee is paying a lease rental of 5 lakh rupees. Now lessee is acquiring an additional space of 5,000 square feet, additional space of 5,000 square feet, right? So the same 5,000 square feet, the lessee is again getting at 50 rupees per square feet, right? So this is 2,50,000 rupees. So friends, whenever there is an increase in the scope of the lease, right? Either by adding the right to use one or more underlying assets, right? Whenever there is an increase in the scope of the lease and there is an increase in consideration also, there is an increase in consideration also. And this increase in consideration is with respect to the market value, with respect to the fair value, with respect to the standalone selling price, right? Means whatever space, whatever area, whatever scope I am increasing, I'm also paying the relatively, I'm also paying the rental for that, right? The rental for additional space, the lease rent for additional space is also at a market value, right? In that case, this lease modification will be considered as a separate lease. Means, for example, for example, so let me move back to my Excel file, and there I'll discuss this thing. Example, lease modification, lease modification, right? Lease modification will arise in three situations, right? Three situations which were not form part of original lease terms and conditions, right? Number one, A is change in the scope of the lease. For example, for example, adding or decreasing the underlying asset. Let's say 10,000 square feet to 15,000 square feet, or let's say 6,000 square feet, right? This is meant by scope. B, change in the consideration, change in the consideration. For example, 20,000 rent to 25,000 or 15,000, right? There's an increase or decrease in the lease rental, and it is not form part of the original lease contract. I have already mentioned, if it is form part of the original lease contract, then it is not considered as a lease modification, right? C, then change in lease term. For example, 10 years to 15 years, or let's say 6 years, right? So these are the three examples. Okay. Whenever there is a lease modification, then either it will be treated as a separate contract, means separate ROU and lease liability will be created separate contract, or either it will be created as a separate contract, or 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 it will be treated as an adjustment to existing contract, right? Right. What does it mean? It means no change in the ROU or lease liability of existing contract, contract. In this case, there is a change in ROU or lease liability of existing contract, right? Is that clear? Is that clear, friends? In these two cases, is it clear? Yeah. So, friends, example of this, right? Example of, let's say, example of this. A Limited has occupied. A Limited has entered into the lease contract of 10,000 square feet of space at the rate of 50 rupees per square feet for a period of 5 years, right? A Limited has entered into a lease contract of 10,000 space at the rate of 50 rupees per square feet of monthly rental for a period of 5 years, right? For a period of 5 years. After 2 years, A Limited has entered into an addendum to addendum in the main contract, right? So A Limited has signed just a single piece of paper and it has been annexed with the main contract. A Limited has entered into an addendum to extend the area by 5,000 square feet at the rate of 50 rupees at the rate of 50 rupees per square feet, which is commensurate with the market rental of the property, which is commensurate with the market rental of the property, right? After 2 years, okay. Of course, what A Limited has done, A Limited has created a right of use asset and leasehold liability on the basis of 5 lakh rupees per month, right? 5 lakh rupees per month for a period of 5 years. A Limited is depreciating this right of use asset, and A Limited is also charging an interest on lease liability and deducting by the lease rental. Okay. So this is how this ROU and lease liability accounting is happening. After 2 years, when the 3 years contract is remaining, in that date, A Limited has entered into an additional space by 5,000 square feet, but the rental is also on the basis of fair market rental, on the basis of fair value. So this will be considered as a new contract. This will be considered as a separate contract, right? The increase in scope, the increase in consideration is on the basis of fair value of the increase in scope, and hence this contract will be considered as a separate contract, and not as an adjustment to the existing contract, right? Hence a fresh right of use asset and lease liability needs to be recognized for the additional space of 5,000 square feet, of area, right? I hope this is clear to everyone, right? This is clear to everyone, I believe. Sir, what happens if the increase in space is not commensurating with the increase in consideration on the basis of fair value? For example, there is an increase in space by 5,000 square feet, but the rental which the lessor is charging, it is less market rental. For example, the lessee has told, see, I am your existing tenant, and I have I have already occupied 10,000 square feet of area, right? So please give me a discount. Please give me a major discount, okay? And instead of 50 rupees square feet, the lessor has to pay agrees to receive, 25 rupees per square feet, which is not a fair market rental. What does it mean? It means the lessor is not only thinking from the perspective of this 5,000 square feet, the lessor is thinking from the entire 15,000 square feet. At times we are saying, na, for example, the lessee, when lessee is bargaining, lessee is telling him that I will continue to pay this 10,000 square feet at 50 rupees, which is 5 lakh rupees, right? And the additional 5,000, I want you to give me at 25 rupees per square feet. So the lessee will be saying that no, 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 I will be at loss. The lessor is saying that no, I will be at loss because the market rate is 50 rupees and you are saying 25 rupees. So then, as a lessee, I am telling that why you are thinking like that. Your total, I am paying you 5 lakh rupees for the first 10,000. For the another 5,000, I will pay you how much? 25 rupees. So in total, I am paying you 6,25,000 rupees for how much of area? For 15,000 area, right? So roughly, I'm paying you 42 rupees per square feet. 42 rupees per square feet, right? So don't think from the perspective only 5,000, think from the entire contract, right? Because I'm the same lessee who will be paying you the lease rental. My outflow will be 6,25,000 rupees every month. So what does it mean? The market rental is not the increase in rental, the increase in space is not commensurating with the increase in rental, right? Why? Because the lessor and lessee has also negotiated this contract as an entire contract, as one contract, right? And hence, in this case, if there is an increase in scope of the lease, and where the market rentals, where the consideration is not commensurating with the market rental, with the increase in the scope, in that case, this will not be considered as a separate contract. This will be considered as a adjustment in the main contract, right? But in this case, whenever there is a change in the scope of the lease, I mean to say increase in the scope of the lease, and this increase in scope of the lease is also in line with the increase in the rentals, increase in the lease rental, in that case, this will be treated as a separate contract, right? Is that clear? Is that clear? Nisha is saying, sir, in case there is an introduction of a new party in the lease contract, either the lessee or the lessor, then does this lead to a modification to the existing contract or altogether a new contract? First of all, Tanisha, let's say I'll take a real life example. For example, a lessee has taken a building on a rental basis for a period of 2 years, for a period of 5 years, right? And the lessee is paying a rental payment of 10,000 rupees per month, or let's say 1 lakh rupees per year. Now, what happened? Earlier, the lessee was paying a lease rental to the one party only because there was a one owner of the building. But what happened? This building belongs to a person, and that person has surrendered. That person has, given the ownership of this building to its two sons, right? This person has two sons, and this person has divided the property into the two parts. Two parts means the this person has given this building this person has made his two sons as a owner of the building, right? Now this lessee has to pay 50% rental to the one party and 50% rental to the another party. These two parties are the two brothers. Okay. There is no change in lease rental from the perspective of the lessee. There is no change in the lease term from the perspective of the lessee. There is no change in the lease consideration from the perspective of the lessee. No scope of the lease, no consideration of the lease, no basically lease term. Is it a lease modification? This is not a lease modification. This is not a lease modification, right? Tanisha is then say asking, sir, why it is a fresh contract? Why not only extension to the older one? Tanisha, it is a fresh contract from the perspective of right of use asset and leasehold liability accounting, right? Okay, I'm not saying it is a fresh contract means that everything has to be signed fresh. Even in my question, I have written there is an addendum. Addendum means there is a update, there is a updation addendum, or there is a updation annexure which is annexed to the main agreement, right? This is what I'm telling you. This is what I'm telling you. Okay. So I'm only talking about the accounting, Tanisha. I'm not talking about the signing of a fresh piece of paper or signing of something, an entire 30 or 40 pages new agreement. I'm not talking from that perspective. I am talking from the accounting perspective that the remaining 3-year accounting for this new extension 5,000 has to be a fresh creation of ROU, fresh creation of lease liability, right? If you will be saying that, sir, this accounting should also be on the basis of the updation of the existing ROU and lease liability, this accounting will become cumbersome, right? और वैसे भी अगर आप देखो तो क्या होगा, आपका एक नया एरिया आया और आपका एरिया भी मार्केट रेंटल पे है. दिस मींस it does not have any impact, any bearing of the earlier contract, right? So this will be seems like a new contract. Shruti is asking, sir, if decrease in consideration was there in the same question, then sir, Shruti, just wait for some time. Here I have only covered increase in scope and increase in consideration, which is also at a on the basis of the market rental fair value. Even though if the increase in scope is not in line with the increase in rental, which is on the fair value, in that case it is not a separate contract, right? So let me move to the another question. And now I'm going back to the PPT. Let's discuss this question also. Then we will move further. Lessee enters into a 10-year lease. Lessee enters into a 10-year lease for 2,000 square meter of office space. This is 10-year lease term, 2,000 underlying asset. At the beginning of year 6, at the beginning of year 6 means after 5 years, lessee and lessor agrees to amend the original lease for the remaining 5 years to include an additional 3,000 square meter of office space in the same building. So after 5 years, the lessor and lessee agrees to amend the original lease contract for the remaining 5 years, right? So it is a total is 10 year. The total agreement is for 10 year. And this total agreement for 10 year is for 2,000 square meter of office space. Now what happened after 5 year? After 5 year at this point of time, the lessor and lessee decided to amend the existing contract, and they wants to include the additional office space of 3,000 square meter. So means from this period to this period, in the initial first 5 year, this office space is 2,000 square meter. From this to this has become 5,000 square meter, right? This has become 5,000 square meter. The additional space is made available for use by the lessee at the end of the second quarter of year 6. So this space is getting available by the lessee at this point of time, which is after 5.5 year. In the second quarter of by the end of the second quarter of year 6 means after 5.5 year, means the remaining period is 4.5 year. In the first 5.5 year, the total space is 2,000 square meter. In the remaining 4.5 year, the space is 5,000 square meter. The increase in total consideration for the lease is commensurate with the current market rate for the new 3,000 square meter of office space, right? So this increase in total consideration is also commensurating with the current market rental for the new space. Adjusted for the discount, the lessor has also given some discount. Now let's see whether this discount makes the treatment of this contract different, or this contract would still be as a separate contract. Adjusted for the discount that lessee receives, reflecting that lessor does not incur cost that it would otherwise have incurred if leasing the same space to a new tenant, right? So basically, what happened? The lessor is giving some discount to the lessee, right? And what discount lessor is giving to the lessee? The discount which the lessor is giving to the lessee, it is to the extent of, the cost which the lessor will incur to bring the new lessee. For example, the lessor is telling the lessee is asking for the discount, and lessor is telling, see, I can do one thing, right? For example, if I would have to given this space to a new lessee, I may have to incur some legal fees, right? Because of course there is a signing of the agreement. So that agreement requires payment of the stamp duty, lawyer fees, and I need to pay some brokerage commission also for the to the brokers. Normally this normally this lessor, pay the brokerage fee to the brokers for acquiring the tenant, right? So if this lessor will provide this space to the existing lessee, then all this cost would have been avoided. The cost of probably stamp duty, or cost of lawyer fee probably, or let's say marketing cost, brokerage fee probably. So whatever cost has been avoided, the lessor is giving a discount to that extent only, right? It does not mean that the property is not on a market rental basis, right? So how should this said modification be accounted for? Guys, tell me whether in this case it will be a separate contract, the lease modification will be treated as a separate contract, or it will be treated as an adjustment to the existing contract. Tell me what will be the case. Tell me, friends, what will be the case? Is it a separate contract, or is it a separate contract, or is it a updation in the existing contract? I mean to say adjustment to the accounting of existing contract. Abdul and Tanisha is saying a separate contract. You are right. You are right. You are right, guys. Rahul and Ridhima has also told that it is a separate contract. You all are right. So this discount does not in the market rental. Why? Lessor उतना ही discount दे रहा है जितनी लेसर को सेविंग हो रही है, right? जितना लेसर को सेविंग हो रही है. Okay, is that clear? Clear, friends? To my sir, when there is only change in consideration and no change in scope, no change in lease area, then how it will be accounted, right? So friends, I have told you two things. One, I have told you whenever there is a change in the scope, means increase in scope, and this increase in scope is in line with the increase in the lease rental, right? Then there is a separate contract. So whenever there is a lease modification, two things will happen. Either it will be a separate contract, or it will be adjustment to the new contract. Sorry, it will be adjustment to the existing contract, right? So friends, now let's discuss in other cases. We understood the separate contract example. Whenever there is an increase in scope, and it is also in line with the market rental, it is also in line with the lease rental, then it is a separate contract. Sir, when there is an adjustment to the existing contract. So let me tell you. Let me tell you. Okay. Lease modification. Okay, lease modification. Friends, first of all, change in scope. We have discussed change in scope, right? Increase in scope. We have discussed increase in scope. We have discussed increase in scope. Here, increase in scope and the consideration also commensurate, means in line with the standalone selling price, means the consideration is also in line with the market value of the lease rental for this additional scope, for this additional space, additional scope, right? In that case, it has to be considered as a new contract. It has to be considered as a separate contract, right? Now, if there is a change in the scope, means there is an increase in scope, but the consideration is not in line with the market rental. It is not in line with the standalone selling price, standalone selling value, standalone price of this increase in scope. Then you have to remeasure the lease liability at the modification date. In that case, the lease liability modification is required. The lease liability modification is required in that case. The lease liability modification is required in that case. Okay. Is that clear? The lease liability modification means, so remeasurement of lease liability is required on the modification date. Means existing lease liability is required to be remeasured, right? Remeasured, and whatever there is a change, the change has to be, the change has to be adjusted. The change, the impact needs to be taken into the ROU asset as well. For example, the example which I have taken, 10,000 square feet was at 50 rupees, additional 5,000 square feet at 25 rupees, right? And it happened after 2 years. So what happened? After 2 years, you are required to remeasure your lease liability. Remeasure your lease liability. Okay. And whatever increase or decrease in lease liability is there, your ROU asset needs to be debited or credited by that value. Right? We will discuss one of the examples. Okay. Sir, if there is a decrease in the lease scope, if there is a decrease from 10,000 square feet, we are taking 8,000 square feet. This is not an increase, this is a decrease. I am reducing my space. Then what happened? In that case, whenever you are reducing your space, you have to de-recognize partial lease liability and partial right of use asset, right? And whatever impact is there, it has to be taken to the P&L. Sir, if there is a change in the lease term, means decrease in the lease term. If there is a decrease in the lease term, then what happened? Again, if there is a decrease in the lease term, then you have to de-recognize partial right of use asset and partial right of use asset and lease liability. Whatever difference is there, it will go to the P&L. Sir, if there is an increase in the lease term, then what happened? Then again you need to remeasure the lease liability on the modification date, and whatever change is there, you have to do the adjustment in the ROU asset. Sir, if there is no change in scope, but only there is a change in consideration, either consideration is increasing or decreasing. In that case, you have to remeasure the lease liability, and whatever change is there, you have to take that change to the ROU asset, right? This is what this accounting needs to happen. Right, friends? Just to simplify, I have given you another summary. I hope this summary is visible to all of you. Yeah. If I talk about this thing, when it will be considered as a new lease contract, whenever increase in scope is equal to increase in consideration basis fair market lease rental. In that case, it will be a separate contract. Second, when lease liability needs to be remeasured at modification date and adjustment has to be made to the ROU asset, whenever the increase in scope is not equal to increase in consideration, there is only increase in lease term, there is only change in the consideration. without change in scope, right? So this is the remeasurement of lease liability at the modification date. When a lease liability and ROU needs to be derecognized partially, and the impact has to be taken in the P&L only in two cases: whenever there is a decrease in lease term and there is a decrease in lease scope, right? So whenever something is decreasing, you have to derecognize partial ROU and partial lease liability, right? Is that clear? So friends, let's discuss a detailed example, a detailed practical example for this case study. Illustration number 34. After this illustration, things will be very much clear to you guys. Yes. So we will discuss this illustration and we will understand the concept on the Excel file. Illustration number 34. Illustration number 34. Okay. Illustration number 34. So after solving this illustration, things will be very much clear to you guys. Okay. Don't worry about that. What it says: a lessee enters into a 10-year lease for 5,000 square meter of office space. Lease term is 10 year. Office space is 5,000 square meter. The annual lease payment are 1 lakh rupees payable at the end of each year. Okay. So payable at the end of each year and annual payment is 1 lakh rupees. Interest rate implicit in the lease cannot be readily determined, right? And the lessee's incremental borrowing rate at the commencement date is 6% per annum. Discount rate is 6% per annum. So on the commencement date, the right of use asset and lease liability has to be recognized on the basis of 6%. Means all the future lease rental has to be discounted at 6%. At the beginning of year 7, means at the end of year 6, lessee and lessor agrees to amend the original lease by extending the contractual lease term by 4 years, right? At the beginning of year 7 means after year 6, after completion of year 6. So how many years are left after 6 years? 4 years are left. The total lease term is 10 years. So after closing of year 6, lessee and lessor agrees to amend the original lease by extending the contractual lease term by 4 years. By extending the contractual lease term by 4 years, right? The annual lease payments are unchanged. That is rupees 1 lakh payable at the end of each year from year 7 to year 14. So इस change के बाद, after this change, the total 10-year contract become 14-year contract, and at the beginning of year 7, the remaining contract life is 8 years, right? 8 years. So in this case, the lease consideration, the lease payment are unchanged. The scope is unchanged. There is no change in the scope. There is no change in consideration, but the change is only with respect to the lease term. Change is only with respect to the lease term. The lessee's incremental borrowing rate at the beginning of year 7 is 7% per annum. How should the said modification be accounted for? How should the said modification be accounted for? Right. So this is a case of increase in the lease term. This is a case of increase in the lease term. Right. So whenever there is an increase in the lease term, there is no change in the scope. There is an increase in the lease term. Whenever there is an increase in the lease term, what happened in that case? What happened? Tell me what happened in that case. Whenever there is an increase in the lease term, you have to remeasure your lease liability on the modification date. Means at the end of year 6 or beginning of year 7, I need to remeasure my lease liability. And whatever change is there, I have to take the change to my ROU asset. Right? This is what I need to do. Okay. So friends, in this case, what else is given in this question? What else is given in this question? The total lease term has become 14 years from 10 years, and at the commencement date, the discount rate was 6% per annum. And when this change happened, when this modification happened, at that point of time, the discount rate is 7%. So do we need to take this 7% discount rate on the date of modification? Answer is yes. Why? Because the time value of money will change. Since there is a change in the life, there is a change in the lease term, and hence the new discount rate is required to be taken for computing the new lease liability, for computing the revised lease liability. Okay. This is what is required to be taken. This is what is required to be taken, right? Now, I will solve this question one by one. I will solve this question one by one, okay? So, I am taking you to my Excel file, and let me give you the fact of this question, first of all. This is illustration number 34. What is given in this question? Initial lease term is given, which is 10 years, right? Which is 10 years. Initial lease term is 10 years. Discount rate at the commencement date. Discount rate at the commencement date is given. Okay. Just give me a minute. Initial lease term is 10 years. Lease payment is 1 lakh rupees payable at the end of the year. Discount rate at commencement date is 6%. This is a modification. Yes, increase in lease term by 4 years. Total lease term is 14 years. So time of the modification is beginning of year 7 or end of year 6. Discount rate at the modification date is 7%. Right? This is what is given in this question. Calculate the impact of modification along with accounting entries. Calculate the impact of this modification along with accounting entries. Now I need to solve this question, right? I need to solve this question. And you need to just see that how this question has to be solved. How this question has to be solved. Yeah. First of all, what I'll do, first of all, I need to compute that what is my ROU and what is my lease liability on the basis of the original terms and conditions. I need to compute that. Okay. What is my step number one? My step number one is to calculate present value of lease payment on the basis of original terms. That is my step number one. Okay. Step one. Please write down step one. Calculate present value of future lease payments. Calculate present value of future lease payment on the basis of original lease terms. On the basis of original lease terms, right? This is how we are going to solve this question. Solution. Calculate the present value of lease payments on the basis of original lease terms. Okay, on the basis of original lease terms. How many years are there? 10 years. Initially it was 10 years. What are the lease payment? 1 lakh rupees. What is the present value factor? You need to compute at 6%, and then you need to compute the present value of the lease payment, right? Year, lease payment, present value factor at the rate of 6%, and present value of lease payment, right? This is what we need to consider. What is the year? Year is 10 years on the basis of original lease and terms and conditions. This is simple math we are doing, which we have already, understood. Your computation of ROU asset and lease liability. What is my lease payment is 1 lakh rupees. My lease payment is 1 lakh rupees, right? and there is no escalation, so it will always be 1 lakh rupees. The payment is at the end of year, at the end of the year. So for the first year, there is also a discount factor 1 divided by 1.06, right? Again, divide by 1.06. So I need to just put this present value factor. Let's take this present value factor 3 digit of the after decimal. So normally you can keep 3 digit after decimal, and this will be my present value of lease payment. This is the total, right? My total is how much? The total is 736009. This is my present value of future lease payments, right? This is what it is given in the question, right? 736009. What is my total lease payment? If I'll see, my total lease payment is 10 lakh rupees, right? The present value of 10 lakh is 7,36,009. What is the initial recognition at the beginning of year 1? What is the initial recognition? Recognition at the commencement date. What is the initial recognition at the commencement date? The initial recognition at the commencement date is what? Right of use asset account debit to lease liability credit. Sorry, 736009, 73600. Right. I have done the commencement date accounting, and this is what I have done. Right. What is my step number 2? My step number 2 is prepare lease liability schedule on the basis of original lease term. Right. First of all, you have to do this accounting, na? Step number 2. My step number 2 is prepare schedule of lease liability. Prepare schedule of lease liability on the basis of original lease terms and conditions. These are the years. Year. Okay. Then opening balance, interest at the rate of 6%, payment and closing balance. Then opening balance, right? After that, interest at the rate of 6%, because you have discounted with 6%, so you have to charge interest also on the basis of 6%, as simple as that, right? Then your lease payment, which is 1 lakh rupees. Then your closing balance, right? What is my opening balance? My opening balance at the commencement date is 736009, right? This is the lease liability, ROU asset and lease liability. Simple entry. All are okay with this entry, right? Step 1, I have computed ROU and lease liability on the commencement date. Step number 2, I am preparing a lease liability schedule. What is my interest at the rate of 6%? This multiply by 6%. The payment is happening at the end of the just a minute. All right. The payment is happening at the end of the year, 1 lakh rupees. Closing balance is this plus this plus this. So closing balance at the end of year 1 is 680. This will become the opening balance of year 2. This will be 6% of 680 interest cost. The lease liability payment is again 1 lakh rupees in the year 2. Closing balance is 620, and this become the opening balance of 3 years. And this is how this accounting needs to be happen, right? And at the end of year 10, this liability will become zero. This liability will become zero, right? So I believe this step number one and step number two is clear to all of you, right? Yedu Kondalu is saying, sir, rent 1 lakh is same for 1 to 10 year. Can we use annuity factor instead of present value for each year? So Yedu Kondalu, please hold on for some point of time, right? You will be able to understand that why I am not applying this annuity factor. Okay. Why I am not applying this annuity factor for 1 to 10 years. I hope this is clear to all of you so far. I hope it is clear to all of you so far, guys, right? Step number one, compute present value of future lease payment, then create, then recognize ROU and lease liability. Then step number two, prepare lease liability schedule, right? Okay. Step number three. So basically, step number one has given you the opening balance of lease liability and opening balance of ROU asset at the commencement date. Step number two has given you the lease liability schedule where you have identified the finance cost for every year, then closing lease liability value, right? This right of use asset is required to be depreciated on a straight line basis. And every year you get the carrying value. Every year you will get the closing value. Okay. What is my step number three? Now, friend, we have already done the original terms and basis, original terms and condition accounting. We have already done the 10-year 1 lakh 6% accounting. Now there is a modification. There is a modification. The modification is at the end of 6 year, which is at the beginning of 7 year. So at the beginning of 7 year, I need to remeasure my lease liability. I need to remeasure my lease liability. What is my step number three? My step number three is calculate ROU and lease liability balances on the date of modification, that is at the end of year 6. मतलब जब मेरे मेन कॉन्ट्रैक्ट में मॉडिफिकेशन हो रही है उस दिन मेरी राइट ऑफ यूज एसेट और मेरी लीज लाइबिलिटी की क्लोजिंग वैल्यू क्या है, कैरिंग वैल्यू क्या है. कैलकुलेट स्टेप नंबर 3. प्लीज राइट डाउन स्टेप नंबर 3. स्टेप नंबर 3. Calculate carrying value of ROU asset and the lease liability at the time of modification, that is end of year 6 or beginning of year 7, same thing. My right of use asset and lease liability, right? My lease liability is pretty simple. My closing balance at the end of year 6. What is my opening balance? First of all, what was my opening balance at the commencement date? What was my opening balance at the commencement date? For ROU, it was 736. For lease liability, it was also 736,009. Right? What is the accumulated depreciation for ROU asset? There is no depreciation on lease liability. What is the accumulated depreciation for ROU asset? Friends, ROU asset का accumulated depreciation क्या होगा? क्या होगा ROU asset का accumulated depreciation? The total lease term was 10 year originally. 6 year has already gone. So divide by 10, multiply by 6, 441,605. What is the closing balance? What is the closing balance? For ROU asset, the closing balance is this plus this 294,403. For lease liability, what is the closing balance? You have already prepared the lease liability schedule, and at the end of year 6, the closing lease liability balance is 346,511. 346,511, right? It is 346511. The closing lease liability balance is 346511. You have got the balance. You have got the balance. At the end of year 6, you have got the balance of ROU asset and lease liability. This was your step number 3. Friends, on step number 1, step number 2, which is the original initial recognition accounting, step number 3, you have computed the carrying value of the asset and liability at the end of year 6, which is the time of modification. Do you have any doubt, any problem, any question till step number 3? We are solving this question step by step. Do you have any question till this step number 3? Do you have any question? Yeah. Do you have any doubt till step number 3? Shall I move forward? Then what is my step number 4? Now, friends, I have computed the carrying value of my asset, carrying value of my liability at the date of modification. Now, I need to remeasure my lease liability on the date of modification on the basis of revised lease terms. So, step number 4 is calculate revised lease liability on the basis of revised lease terms on the date of modification. Number 4. Step number 4. Compute. Step number 4. Calculate revised lease liability. Calculate revised lease liability calculate revised lease liability on the basis of revised terms at the time of modification. Calculate revised lease liability on the basis of revised lease terms, on the basis of revised lease terms on the date of modification. That is start of year 7, beginning of year 7. That is beginning of year 7. Okay, this is my step number 4. Now I need to compute my lease liability on the basis of the revised lease terms. So friends, up to year 6, the accounting has already happened. Now you need to start with year 7. You need to start with year 7. This is year, as simple as that. This is year. This is my lease payment. Now I need to compute the future lease payment at the rate of 6% or 7% at the rate of revise discount rate. 7%, this is my present value of lease payment. Now this year start with year 7. 7 till 14. 7 till 14, right? 6 year has already gone. Now you have another 8 years. You have another 8 years. Do you have any doubt? So what I am doing at the time of modification in the beginning of year 7, I am recomputing my lease liability. I am recomputing my present value of future lease payments. What is my lease payment? My lease payment is nothing. It's a 1 lakh rupees every year. It's 1 lakh rupees every year because there is no change in lease payment. There is no change in scope of the lease. What is my present value factor at the rate of 7%? Equal to 1 divided by 1.07. Right? So friends, on year 7, ईयर 7 के बिगनिंग में खड़े होकर मैं कंप्यूट कर रहा हूं कि अगले 8 साल के लीज रेंटल का प्रेजेंट वैल्यू क्या होगा एट द रेट ऑफ 7%. दिस इज व्हाट आई एम कंप्यूटिंग. Divide by 1.07. Right? So I can say that this is the commencement date of modified terms. Right? This is the commencement date of modified terms. Okay. What is my revised lease liability? It is 597130. My revised lease liability on the date of modification is how much? It is 597130. 597130. Okay. Now, what is my step number 5? My step number 5 is compare revised lease liability with existing lease liability on the date of modification. Right? Revise step number 5. It is a simple step number 5. Compare revised lease liability with the compare revised lease liability with the existing lease liability on the date of modification. Right? What is my revised lease liability? 597130. What is my existing lease liability? First of all, let me write revised lease liability. My revised lease liability comes out at 59730. What is my existing lease liability? My existing lease liability is 346511. 346511 is my existing lease liability, right? What is my increase in lease liability? What is my increase in liability? What is my increase in liability? This minus this. Since there is an increase in 4-year lease term, I need to increase my lease liability also, technically speaking. So this will be increased by 25619, right? Now you need to adjust. You have to credit your lease liability by 250619. What you will debit? What I have told you. Whenever there is an increase in lease term, you have to compute the remeasure the lease liability, and whatever there is an impact, you have to adjust this increase with the ROU asset, right? With the ROU asset. Okay. In this case, what will be your accounting? I can say step number 6. Adjust ROU asset with change in lease liability. What is your accounting entry? What is your accounting entry? What is your existing ROU asset? What is your existing ROU asset? Your existing ROU asset at the end of year 6. Existing ROU asset at the end of year 6 is how much? Your existing ROU asset is 294403, right? Then you need to increase. What is your increase in liability? You need to adjust your increase in liability in your ROU asset, right? How much is your increase in liability? 250619. What is your revised ROU asset? Revised ROU asset. What is your accounting and ROU asset account debit? Asset account debit to lease liability credit. By how much? 250619. 250619. Finally, at the end of year 6 or beginning of year 7, your revised ROU asset comes out at 545023. Your revised lease liability comes out at 597310. Okay, 597310. And now this 545023, this requires to be depreciated over the next 8 years on a straight line basis, right? And this revised lease liability, again, you need to prepare a schedule for 8 years, right? Where you need to factor an interest cost of 7%, lease payment of that 1 lakh rupees, and you will find at the end of 14 years this will become zero. Why? Because this amount you have computed by discounting 1 lakh rupees of lease payment at the rate of 7%. When you unwind, the result will be the same. Okay. And what I have done in this question, I have done nothing. I have just, moved step by step. So, first of all, on the commencement date, I have computed my right of use asset and lease liability. Then I have prepared my lease schedule. It is important to compute the carrying value of the lease liability at the end of every year. Then step number three, I have just computed what is my closing balances of right of use asset and lease liability on the date of modification. Then I have remeasured the lease liability on the basis of modified terms, right? Then I have compared my lease liability, revised lease liability with the existing lease liability. Whatever the change was there in the lease liability, I have taken the impact in my right of use asset. This is what the accounting I have done. If you have any question, if you have any doubt, I would be happy to answer here. So, friend, now you have understood in the first case when it was a separate contract, no such complex calculations were required. Why? There was no such modification was required because it was treated as a separate contract. But when it is not treated as a separate contract, you need to remeasure your lease liability. If something which is increasing, you need to remeasure your lease liability kind of thing. Right? Again, moving back to the summary, new lease contract we all have understood, right? If there is an increase in scope, of course something is increasing, there is an increase in scope, but that increase is not in line with the market rental, then you need to remeasure your lease liability. You need to consider this as a change in the existing contract, and you need to remeasure your lease liability. Whatever change is there, you need to adjust your ROU asset. If there is a only increase in lease term, if there is only increase in lease term, like in this case, again you need to remeasure your lease liability. If there is a only change in consideration, again you need to remeasure your lease liability, right? But if there is a decrease in lease term or only scope is decreasing, in that case you have to de-recognize your lease liability and right of use asset, and you have to take the impact in the P&L, right? Whatever the remaining impact is there, you have to take in the P&L. Is that clear? This is what we have done as a question, right? Is that clear, friends? Is that clear? This is one of the question on your again, this remeasure of lease liability. This you can just solve, right? The solution is also given. You can solve this question, okay? Friend, if you have any question on this, I can discuss. Otherwise, I'll move forward to the next concepts. Please do let me know if you have any question further. If you have any question, please do let me know. Yeah. Please remember that chart always. Please remember this chart, this summary. This summary will help you, right? There are three kind of, there are three kind of accounting treatment: new lease contract, remeasurement of lease liability at modification date, derecognition of lease liability in ROU asset. Right? There are three kind of changes. So friends, now I'll start the lessor accounting. So before starting the lessor accounting, it's what is the time now? So it's 8:20 now. Let's have a 7 minutes break, and we will start at 8:27. Okay, 8:27. modification accounting? Any doubt on this lease modification accounting, friends? This case study is your homework, right? Very simple case study. Now, friend, let's start the lessor accounting, right? So, friends, if I talk about lessor accounting, so far we have completed lessee accounting. Only one part is remaining in lessee accounting, which is your exemption. Exemption in case of exemption in case of recognition of ROU asset and lease liability. This we will be covering later on. But before that, we are covering lessor accounting, right? So in case of lessee accounting, we have discussed there is no concept of operating lease and finance lease. Okay. There is only a single lease model where doesn't matter if you are taking an asset on a lease for 2 year or 20 year, you have to recognize right of use asset on the basis of present value of future lease rentals. On the basis of present value of future lease rental. That's all. Okay. There is no concept of operating lease or finance lease. There is no concept of risk and reward transfer, right? If you are getting a right to control the use of an asset for a period of 2 years, you have to recognize a right of use asset for a period of 2 years. If you got a right to control the use of an asset for a period of 20 years, you have to recognize the right of use asset on the basis of present value of lease rental, present value of lease payment for 20 years, right? That's what the accounting is there. There is no concept of finance lease, operating lease, right? But with respect to the lessor, with respect to lessor, the concept of operating lease and finance lease is there, same like accounting standard 19. Friends, the lessor accounting is comparatively very simple accounting in comparison to lessee accounting. When I'm saying simple accounting means this accounting you guys have already seen in accounting standard 19. The lessor accounting in the books of the lessor is similar what we have already read, what we have already experienced, what we have already seen in accounting standard 19, right? And it is depending on the risk and reward. If risk and reward are getting transferred, in that case, that lease will be considered as a finance lease. But if risk and reward are not getting transferred, in that case, that lease will be an operating lease from the perspective of lessor. Sir, what we were doing in AS 19. So first of all, let me show you the picture of AS 19, right? In AS 19, there were operating lease and finance lease from lessor perspective as well as from lessee perspective, right? In Ind AS 116, from the lessee perspective, there is only one lease. There is a single lease model, and that lease model talks about recognition of right of use asset and creation of lease liability in the books of the lessee. But from the perspective of lessor, still there is a operating lease and finance lease concept is still there, right? In case of a operating lease, for example, I am a lessor and I have purchased a car. I have purchased a car. I am a lessor. I have purchased a car. What accounting I'll do? First of all, I'll recognize that car as a PPE. I'll recognize that car as a property, plant and equipment. I'll debit car and credit cash. That's the accounting which I'll do, right? That is the accounting which I'll do. Simple. So now I am a lessor. The life of the car is 10 years and I have given this car on a lease basis. I have given this car on a lease basis to one of the tenant, right? So whatever rental I'm earning out of that, right? So this was a concept. This was a concept of operating lease, and whatever rental I'm earning, that is my income. That is my operating lease income, right? That is my operating lease income. Okay, friends. In that case, what lessor will do? Lessor has to recognize this car as a property, plant and equipment. Lessor will depreciate this car over a period of 10 years. whatever rental lessor will earn, lessor will show it as a income, right? This is the accounting in case of operating lease. Sir, don't you think in this case lessor is showing this car as an asset, and lessee, for example, lessee who has taken this car on a lease basis for 3 years, lessee is also creating an asset in its books of accounts? How many of you thinks that there is a double recognition of assets? How many of you think that there is a double recognition of this asset? How many of you think about this? How many of you think that there is a double recognition of this asset? Lessor has already recognized this car in its books of accounts, and lessee is also recognizing right of use asset in its books of accounts. How many of you are thinking that it is a double recognition of an asset? Yeah. Friends, it is not a double recognition of the asset. For example, if the lessor has bought a car for rupees 10 lakh, lessor will pass an accounting entry, car account debit to bank account 10 lakh rupees, and lessor will depreciate this car over a period of 10 years. 1 lakh rupees depreciation every year. Lessee has taken this car on a lease basis for 3 years. For example, lessee has taken this car only for 3 years. So lessor is recognizing the car, entire car as an asset. Lessor is recognizing a property, plant and equipment as an asset. But lessee will recognize not the car, the right of use. The lessee is recognizing a right. What right? The right to use that car for a period of 3 years. Lessor has recognized 10 lakh rupees in the head of property, plant and equipment. 10 lakh rupees. But lessee will recognize the present value of the lease rental for 3 years. For example, lessor is charging 1.5 lakh rupees every year. So what is the total payment out of 3 years? 4.5 lakh, right? Let's say discount rate is 10%. So the present value of 4.5 lakh comes out at 3.5 lakh, for example. 3.5 lakh, right? So lessee will recognizing not a property, plant and equipment. Lessee will recognize a right of use asset for 3.5 lakh, and this asset gives the lessee a right to use that car for a period of 3 years only. So lessee will recognize 3.5 lakh and depreciate 3.5 lakh over a period of 3 years. Lessor will recognize 10 lakh rupees as a PPE and depreciate this 10 lakh rupees over a period of 10 years. Right? So if I only talk about asset, yes, there is a double recognition, one asset in lessee books, one asset in lessor books, but the substance of these two assets are different. The life of these two assets are different, right? The life of these two assets are different. Are you agree with that? The lessor is having this asset for the lifetime. It is a property, plant and equipment. The lessee is having this asset for a limited period. It is only for the use to a limited period, and lessee is only recognizing a right of use that asset, not the ownership of that asset, right? Is that clear, friends? Is that clear? So talking about the lessor accounting, in AS 19, we had a concept of operating lease where the lessor is recognizing the asset, lessor is giving that asset on a lease basis, and lessor is recognizing the lease rental income. Then there is a concept of finance lease accounting where finance lease accounting, when a finance lease accounting comes into the picture, there were some indicators which were given in the accounting standard 19. For example, if the lessor has given the asset on a lease basis with a purchase option, with an exercise price, with a purchase option, right? Or lessor is giving that asset on a lease basis for the major part of the economic life. Let's say the life of the car is 10 years and lessor has leased this car for, let's say, 8 years, 9 years, right? Or even 10 years. It means the fruits of this car is majorly enjoyed by the lessee, or or whatever is the fair value of this car, substantially the fair value is getting recovered by the lessor in terms of the lease rental, right? So these were some indicator which we have read in AS 19. These were some indicator which we have read in AS 19 for the perspective of finance lease. So if it is a finance lease, in that case, the lessor will de-recognize the asset. This car, lessor will de-recognize, and lessor will recognize a finance lease receivable. This is what we discussed in AS 19. The same accounting is there in Ind AS 116 as well, right? So friends, I'll discuss this operating lease accounting and finance lease accounting in the books of the lessor. Don't worry about that. Okay. Treatment in the books of the lessor: at the time of inception of the lease, the lessor will see whether it is a finance lease or it is an operating lease. Finance lease is a lease where the risk and reward relating to the ownership of the asset has been transferred substantially to the lessee. Operating lease is a lease where risk and reward incidental to the ownership of an asset has not been transferred to the lessee, right? For example, in case of a property leases, in case of a car leases, let's say if tomorrow the scrap value of the car has been increased, the fair value of the car or property has been increased, so that benefit will also go to the lessee. Why? Because if there is a purchase option which is available to the lessee and exercise price is also fixed, means it is a very negligible price, okay, in that case, if the value of that property or car will increase, so the benefit incidental to the ownership lies with the lessee only, not the lessor. Okay. Right? Not the lessor. Is that clear? There were some example or indicator of the finance lease when a lease will be considered as a finance lease. So there were some examples, some indicator which were given in the standard in AS 19 as well as in AS 116. Indicator relating to the ownership means the lease transfer ownership of the asset to the lessee by the end of the lease term. You are auditing a client. When you are reading a lease agreement, your client has given an asset on a lease basis, right? So when you are reading the agreement of the lessor, your client, so in the agreement it is written that your client means lessor will transfer the ownership of the asset to the lessee at the end of the lease term. This indicates that it is a finance lease, right? Purchase option. The lessee has a purchase option, right? And the lessee is reasonably certain that he will avail the purchase option. Lease term. The lease term is for the major part of the economic life of the asset. Major part means 75%. Major part means 75%, minimum 75%. Right? For example, the total life is 10 years. The total life is 10 years. So if it is more than 7.5 years, then you can say that it is one of the indicator of finance lease. Present value of minimum lease payments. At the inception date, the present value of the lease payment amounts to at least substantially all of the fair value of the asset, right? Substantially is a bigger term. So when you are computing the present value of minimum lease payment, for example, the car which your client, which the lessor has given on a lease basis, the cost of the car is 10 lakh rupees, the fair value of the car is 10 lakh rupees, and the lease rental which this lessor is getting, the present value of the lease rental comes out at 9 lakh rupees. So substantially means 90% or more. So again, it is an indicator of finance lease. Specialized nature. The lessor has manufactured or created an asset which is of a specialized nature and which is only used by the lessee, right? For example, the lessor has given a building to the school, and this building is customized, renovated, reconstructed only for the benefit of that lessee, right? So again, it is an indicator of finance lease. The accounting in the books of the lessor is different in terms of operating lease and different in terms of finance lease. I hope the things relating to this theory is clear to you guys so far. We have not reached to the accounting. We are only talking about these are the indicator of the finance lease. These are the indicator of finance lease, right? These are the finance lease indicators. Any doubt so far? Shall I move forward? What are the 5 finance lease indicator? Number 1, if in the agreement it says that the ownership has to be transferred to the lessee by the end of the lease term, purchase option is available to the lessee, the lease term covers majority of the economic life of the asset, the present value of minimum lease payment is substantially equals to the fair value of the lease asset, and the asset is of a specialized nature which is created, manufactured or reconstructed for the benefit of the lessee, right? Okay, friend, now we will discuss the accounting in the books of the lessor. Accounting in the books of the lessor. So friends, we will discuss the operating lease accounting and we will discuss the finance lease accounting. First of all, we will discuss the operating lease accounting, right? If there's the operating lease, let me take you onto the Excel file and please confirm if my Excel file is visible. Let's talk about the operating lease accounting. Operating lease accounting, right? A limited is a lessor, right? A limited is a lessor. Just a minute. A limited is a lessor who leases the building to B limited for a period of 3 years. The lease rental is 10,000 rupees per annum and to be increased by 10% every year. The life of the building is 20 years and the cost of the building is 20 lakhs. What is the classification and accounting in case of a lessor? First of all, friends, what is the classification of this lease from the perspective of the lessor? Is it an operating lease or is it a finance lease? Question number 1. In the question, whether it is said that the lessee, the lessor will transfer the ownership to the lessee by the end of the lease term, answer is no. It is not given in this question. Number 2, whether your lease term covers the major part of the economic life, answer is no. It is 3 years. 3 by 20, it comes out 15% only. And we were talking about more than 75%. Whether your lease rental, the present value of the lease rental substantially equals to the fair value of the property. For example, I am assuming the cost and fair value is 20 lakh, and in the 3 years, this lessee will pay 30,000 rupees only. So this is not, the present value of 30,000 is not substantially equal to 20 lakhs rupees. Whether the asset is of a specialized nature, it is not given in the question, right? Whether purchase option is given to the lessee, it is not given in the question. What is the classification of this lease? What is the classification of this lease? From the perspective of the lessor, is it an operating lease or is it a finance lease? From the perspective of the lessor, it is a operating lease accounting. So the classification of the lease is equal to operating lease, right? In the books of lessor. In the books of lessee, there is no concept of operating or finance lease, right? Right? Clear? Now coming to the accounting. First of all, when the lessor has purchased this building, what accounting lessor has done? Building PP account debit to bank account, 20 lakh rupees. And this lessor will also charge depreciation on this PP, 20 lakh divided by 20, 1 lakh rupees every year, right? Accounting is building account debit, building PP account debit, building PP account debit, right? How much? 20 lakhs to what? Building PP account debit to bank account. $20 lakhs, right? Building PP account debit to bank account 20 lakhs. Now, lessor is a depreciation on that every year. So depreciation account debit on PP, depreciation account debit to accumulated depreciation, right? 20 divided by 20 because life is 20 years. It is given in the question. 1 lakh rupee is your depreciation every year. I hope things are very much clear so far, right? Very simple, right? If you understand the concept, then everything will be clear, right? Doesn't matter how difficult or how complex the level of question is. If you will go step by step, things will be very much clear. In this question, so this was the PP accounting. Now coming to the lease accounting, right? Now coming to the lease accounting. Standard says that in case of a operating lease, the lessor has to recognize the lease income on a straight line basis. Lessor has to recognize the lease income on a straight line basis. If I talk about rental income at the commencement of the contract, if I talk about what is the rental income, year, right? And income, rental income. 1, 2, 3. In the first year, the rental was 10,000. In the second year, it was increased by 10%. It became 11,000. In the third year, it was again increased by 10%. It became 12,100. The total lease rental which the lessor will earn is 33,100. The total lease rental, right? But this is an operating lease accounting. In this case, the lessor will only recognize the lease rental income, right? Every year on an accrual basis. Friends, standard says that the lessor has to recognize the lease rental on a straight line basis. What is meant by straight line basis? Means today lessor knows that in the next 3 years, I will be earning 33,100, right? So what is the per year income? Just divide by 3. Per year income is 11,033 rupees. 11,033 rupees. Lessor has to do a straight line accounting. What accounting lessor will do? Year 1. Year 1. Bank account debit. Bank account debit. How much money lessor will receive? How much money lessor will receive in the year 1? 1,000 rupees. To lease rental income. To lease rental income. Right? To lease rental income. Credit. The lease rental income will be credited by how much? Will be credited by 11,033 rupees. Right? But I have received only 10 as a lessor. So the remaining will be lease equalization asset. Lease equalization asset. Debit. Right? This will be 11,033 minus 10,000. Sir, what will be the accounting in year 2? In year 2, what will be the accounting? In year 2, bank account debit by how much? Bank account will be debited by 11,000. To lease rental income credit by how much? Lease rental income will be credited by 11,033. Then again, there will be an asset which is required to be created. Lease equalization asset 11,033 minus 11,000. 33 rupees is lease equalization asset. In the balance sheet at the end of year 1, one asset was created which is lease equalization asset. Another asset was created in the year 2 which is again a lease equalization asset of 33 rupees more. So the total becomes 1,067. So what is the accounting in year 3? In year 3, the accounting is Bank account debit. How much? Bank account debit by 12,100. Right. What is my lease rental income? My lease rental income on a straight line basis is same. It will be 11,033. Now I have received more than my income. So what? What? To lease equalization asset. Now I'll credit this asset. Credit. Right? Lease equalization asset credit. How much? 12,000. So this will be credited. 12,100 minus 11,033. 1,067. If you will see, this lease equalization asset has been knocked off. 1,067 minus 33 minus 1,033. Whatever I have created in the year 1 and year 2, this has been nullified in the year 3. Very simple accounting. In case of a lessor accounting, if the classification is a finance lease, then whatever lease rentals are there, it has to be straight lined, right? It has to be straight lined. So every year there is a mismatch between the amount which is received and the amount which is accrued as an income. So the differential will go to the lease equalization asset, okay, or lease equalization liability, whatever. Okay, is that clear? Jigar, is that clear to you? This accounting you have understood? The recognition of the lease rental income on a straight line basis. Have you understood this accounting? The recognition of lease rental on a straight line basis. In case of a escalation, sir, what happened if escalation would not have been there? Then every year it is 10,000 only. Every year it is 10,000. What is the accounting? Bank account debit to lease rental account. Yeah, clear? This is the very simple lease accounting. This is a very simple lease accounting, I would say. Very simple lease account. Okay. So friends, now let's go back to the finance lease accounting. Finance lease accounting, which is little tricky in case of lessor, but it is, I would say, just replica of right of use asset and leasehold liability accounting, I would say. Friend, let me again discuss this finance lease accounting in the book of the lessor with the help of this Excel file. And please let me know if my Excel file is visible, guys. Excel file is visible. Is it visible? Accounting in the books of the lessor. Accounting in the books of the lessor in case of finance lease. So I have framed a question to give you the entire stuff of accounting. A Limited has purchased a car for rupees 8 lakhs as on 1st April 2015. The life of the car is 5 years. After 1 year, means remaining life is 4 years. A, after 1 year, A leases out the car. After 1 year, A leases out the car to B for rupees 1.25 lakh per annum for 4 years. So after 1 year, the remaining life of the car is 4 years, and A Limited has also leased out this car for 4 years. Means whatever remaining life is there, A Limited has leased out the car for the entire remaining useful life. For the entire remaining useful life. Friends, is it a operating lease indicator? I mean to say, is it a operating lease, or is it one of the finance lease indicator? The asset has been leased out for the majority part of the life of the asset. So this is not majority. This is not major. This is complete. The balance is 4 year, and it has been given out on a lease for 4 years. Interest rate implicit in the lease is 10%. Calculate the necessary impact in the books of A Limited. in the books of A Limited, right? Friend, first of all, so in case of finance lease accounting, the remaining life is 4 year, and A Limited has given this asset for the entire remaining life. It means somehow risk and reward are also getting transferred. So it will be like a finance lease accounting where A Limited has to de-recognize this asset. A Limited has to de-recognize this asset, right? And don't you think if I have a car, I have an asset, and I am giving you this asset for the entire lifetime, don't you think whatever the fair value of the asset is there, it is just like a sale. So whatever fair value of the asset is there today, I will be recovering this value by way of the lease rental, by way of the lease rental, right? So let's say if today the value of the car is example 8 lakh rupees, example, I am giving it to you for 4 years. So probably whatever rentals I am taking from you at the end of first year, second year, third year, fourth year, if I'll compute the present value of those lease rental, it should comes out near to 8 lakh rupees, right? It should comes out near to 8 lakh rupees. Okay, clear? Likewise, if the bank is giving you a loan, you are taking a home, you are purchasing a flat, and you are taking a home loan, and you are taking a home loan for 30 lakh rupees for a period of 20 years. But if you will do the aggregate of the total installment, you will find that in the 20 years for 30 lakh rupees, you end up paying 1 crore rupees. You end up paying 1 crore rupees or more than that, right? And how bank is creating this monthly installment over a period of 20 years? So when the bank will compute the present value of this 1 crore, it is coming out at 30 lakh rupees. It is coming out at 30 lakh rupees plus the margin which the bank required, right? So friends, if the asset is for the majority of the economic life, which is given on the lease basis, if the rentals, present value of the rentals are equals to the fair value, right? If the exercise price purchase option is given, the ownership is getting transferred at the end of the lease term, don't you think this indicates the transfer of the ownership, right? So if it indicates the transfer of the ownership, in that case, the accounting has to be different in case of a finance lease in the books of the lessor. In the books of the lessee, it doesn't make any difference, because in any case, if the life of the asset is 4 year, the lessee is recognizing the right of use asset on the basis of present value of the lease payment for 4 year. If the life of the asset is 40 year and lease term is 40 year, the lessee is recognizing a right of use asset on the basis of present value of future lease payments on the basis of 40 years. So friends, lessee is, in every case, whatever lessee is paying to the lessor, lessee is creating an asset. So the life is single, consistent, and simple for the lessee. But if I talk from the lessor perspective, the asset belongs to the lessor. If the lessor is not transferring a risk and reward, then the lessor has to do the asset accounting as per Ind AS 16 and the lease accounting as per Ind AS 116. But if the lessor is also transferring the risk and reward, in that case, the lessor has to de-recognize this asset, because it is the lessee who is recognizing this asset for the lifetime. So it is the lessor who will de-recognize the asset, and lessor will recognize the finance lease receivable. Okay. So friends, in this case, first of all, let me help you with the clear cut solution of this question right from the beginning. Solution. Accounting in the books of the in the books of the lessor, right? Accounting in the books of the lessor. First of all, what is the lease classification? First of all, what is the classification of the lease? The classification of the lease is finance lease in the books of the lessor. It is the finance lease in the books of the lessor. Now let's do the accounting entry. 1st April 2015. 1st April 2015. What is the accounting entry on 1st April 2015? Car account debit, car PPE account debit to bank account, right? So how much money has been paid? 8 lakh rupees. 31st March 2016. Depreciation account debit, right? To accumulated depreciation account, accumulated depreciation credit. By what value? Life of the car is 5 years. 1,60,000 rupees is the depreciation every year, right? What is the carrying value of the car as on 31st March 2016? What is the carrying value of the car? Let me put the narration also. So let me write here. Being car purchased, being depreciation charged. What is the carrying value of the car as on 31st March 2016? What is the carrying value of the car as on 31st March 2016? 8 lakh minus 1,60,000. 6,40,000. 6,40,000 is the carrying value of the car. Okay. Clear? 6,40,000 is the carrying value of the car. I hope it is clear. What is the lease classification? Lease classification is a finance lease. We all understood that the classification of the lease is finance lease. Now this lease is getting entered. So it is a finance lease. Okay. And in the question, one more thing is given. So unguaranteed residual value of 50,000 rupees is also given. You remember when I was discussing the lease payment, I have discussed 5 payment. Kusuma, you have told me that there are 5 lease payment from the perspective of the lessee and there are 6 lease payment component from the perspective of the lessor. Do you remember that part? Do you remember that part? Yeah. You remember that lease payment definition? Do you remember that lease payment definition which I have covered? The lease payment definition. The lease payment definition from the perspective of the lessee is fixed payment plus in substance fixed payment plus variable lease payment on the basis of index plus exercise price of the purchase option plus penalties for termination of the lease plus residual value guaranteed by the lessee plus residual value guaranteed to the lessor by a third party related or unrelated to the lessee. Okay. Or even it is an unguaranteed residual value, it is also a consideration for the lessor, right? So the unguaranteed residual value is also given. Unguaranteed residual value is also given. Now, what are the steps for finance lease accounting? What are the steps for finance lease accounting? Right? What are the steps for finance lease accounting? So friends, finance lease accounting is step number 1. Lessor has to de-recognize the asset and lessor has to recognize the finance lease receivable on the basis of present value of future lease payment plus unguaranteed residual value. Right. Step number 1. Step number 1. Lessor has to de-recognize the asset. Right. Step number 2. Lessor has to recognize finance finance lease receivable finance lease receivable on the basis of present value of lease payment means future lease receipt. Okay, the word is payment only, plus unguaranteed residual value, right? Unguaranteed residual value, right, friends? Unguaranteed residual value. So basically, this finance lease receivable has to be recognized on the basis of present value of gross investment in the lease. What is gross investment? Total lease payment plus unguaranteed residual value. So in total lease payment, only guaranteed part is coming, right? Plus unguaranteed residual value is also required to be considered while computing the finance lease receivable, right? Is that clear? In this case, first of all, calculate present value of future lease payment. Okay, calculate present value of future lease payment. So my present value of future lease payment year, then my lease payment. The word is payment. It does not mean the lessor is not receiving. The lessor is receiving. From the perspective of the lessor, it is receipt. From the perspective of the lessee, it is payment. Present value factor at the rate of 10%, right? Then your present value of lease payment. I hope this Excel file is visible to all of you. Yeah. Present value of lease payment. Year 1, 2, 3, 4. What is my lease payment? It is 1,25,000 is my lease payment. 1,25,000 is my lease payment. Present value factor. If it is at the end of the year, it is not given. We will assuming that this is at the end of the year. Divide by 1.1. So my present value of lease payment is how much? This is this is 396,233, right? The total payment is 5 lakh, but the present value of lease payment is 396,233. 396,233. Right? At the end of this is a lease installment. This is the present value of lease installment. Present value of lease installment, right? At the end of year 4, there is a payment of unguaranteed residual value also. At the end of year 4, again, there is a payment of unguaranteed residual value. And what is the discount rate? Same. Just multiply by this. 34151. 34151. What is the present value of the gross investment? What is the present value of the gross investment? Present value of the gross investment. This is known as a gross investment in the lease. Right? How much? 396 plus this. Right? And what is the gross investment in the lease? The gross investment, and this present value is known as the net investment, right? This is also known as the net investment. In this case, gross investment is how much? 5 lakh plus 50,000. What is net investment? Net investment is nothing. It's a term which is used in the standard. It is 433.84. 433.84. 433.84. Right? 433.84. Is that clear? At the time of initial recognition, The finance lease receivable has to be recognized on the basis of net investment. The finance lease receivable has to be recognized on the basis of net investment at the time of at the time of initial recognition. Initial recognition, right? That is as on 1st April. That is as on 1st April. That is commencement date is 1st April 2016, right? Because in this question you can see that the car was purchased on 1st April 2015, and after 1 year it was leases out for the entire life. Okay. 1st April 2016. What is accounting entry? Finance lease receivable account debit. Finance lease receivable. By how much amount? Finance lease receivable has to be debited by net investment in the lease. By net investment in the lease, which is 433.84. 2. You need to recognize your car to car account. By which value? Car account credit. By which value? You need to credit your car by what is the carrying value of the car? 6,40,000. 6,40,000. Now there is a delta. You are receiving less. The value of the car is more. You are receiving less. In that case, there is a loss on derecognition. There is a loss on derecognition. Yeah. This is how this accounting has to happen on the day one, on 1st April 2016. Right? So Rahul is saying, sir, in this case, the present value of the future lease payment is not equivalent, substantially equivalent to the carrying value of the car. Sir, then how come it become a finance lease? How come it become a finance lease? Rahul, you have a valid question, but when I talked about the finance lease indicator, I have not told that every indicator has to be fulfilled, right? Even one or two indicator have been fulfilled. For example, doesn't matter whether the lease payment covers the fair value of the asset at the inception or commencement date or not. If the asset is for the majority of the economic life of the asset, still it has to be considered as a finance lease, right? Kusuma is saying, sir, depreciation is not considered. Kusuma, depreciation has been considered. You remember this asset was rupees 8 lakh, right? And at the end of year one, after charging depreciation, it becomes 6,40,000. But after 1 year, this asset has given on a lease to the lessee, right? And you are de-recognizing this asset at the end of year one itself, which is at the beginning of the year two. आपने 1 अप्रैल 2015 को एसेट खरीदा, 31 मार्च 2016 को आपने एसेट को डेप्रिसिएट किया, कैरिंग वैल्यू निकाली, 1 अप्रैल 2016 को आपने फाइनेंस लीज पे दे दिया. जैसे आपने फाइनेंस लीज पे दिया, 1 अप्रैल 2016 को यू हैव टू डी रिकॉग्नाइज द एसेट. तो डेप्रिसिएशन फ्यूचर का तो आएगा ही नहीं ना जब आप एसेट को डी रिकॉग्नाइज कर दोगे. इज दैट क्लियर और डू यू हैव एनी डाउट गाइस? इज दैट क्लियर or do you have any doubt? Please tell me. Please tell me, is that clear or do you have any doubt? Do you have any doubt? Ridhima is asking, sir, what is gross investment and what is net investment in the lease? Ridhima, normally what happened? So in the standard, a term is used which is a gross investment. And what is a gross investment? It is nothing. It's a gross receipt by the lessor. So what lessor will receive as a gross receipt? Number one, lease payment. And what is meant by lease payment? Fixed payment, in substance fixed payment, variable payment depending on the rate or index, plus what? Variable payment depending on the index or rate, plus exercise price, plus termination penalty, plus guarantee, residual value guarantee given by the lessee, and another term was residual value guarantee given by the third party or party related to the lessee, right? That is what is given in the lease payment. This is the lease payment. So this total of the lease payment plus unguaranteed residual value, which the lessor is expecting that I'll receive, right? So the total is known as a gross investment in the lease. If you will do the discounting, it will known as a net investment. So present value of gross investment is equal to the net investment. And finance lease receivable has to be recognized on the basis of net investment, right? So when I compare my carrying value of the asset with finance lease receivable, so the differential will goes to the P&L. The difference will goes to the P&L. The difference will go to the P&L. Where it will go, sir? It will go to P&L, right? Now, sir, this is the initial recognition. What is the subsequent recognition? What is the subsequent accounting? What is the subsequent accounting? Right. Initial recognition of lease, we understood. Sir, what is the subsequent recognition at the time of subsequent accounting? So what is the subsequent measurement? Subsequent recognition and measurement. I mean to say, what is the accounting in the books of the lessor on 31st March on reporting date? So now you need to create a lease receivable schedule, like you are creating a lease payment schedule, lease liability schedule. Now you need to create a lease receivable schedule. Same in a same manner. Prepare lease receivable schedule. Receivable schedule. Right? Sir, why we are creating this lease receivable schedule? How this finance lease receivable of 433.84, which you have created, how this finance lease receivable will be completed? How? Let me show you the lease receivable schedule. Let me show you the entire journey of the lease receivable. Lease payment, right? Interest income. In lease liability, there was an interest cost. Here it is interest income at the rate of 10% closing balance. Sorry, here it is a opening balance, first of all. Then there is a interest income, right? Then there is a payment means receipt, lease payment. Here payment means receipt. The word is payment. आप कहते हो ना पेमेंट ले आना, पेमेंट ले आना मतलब there is a cash. Okay. Closing balance. One, two, three, four. What is the opening balance of the lease receivable? 433.84. 433.84. What is the interest income at the rate of 10% into 10%? What is your lease payment? Your lease payment you are receiving is 1,25,000. What is your closing balance? This plus this plus this. This will become your opening balance of lease receivable. Again, you have to charge an interest income, right? You have to recognize an interest income on that. Again, you will pay 1,25,000. Your closing balance comes out to 258, right? 258. Again, you have to charge an interest, recognize an interest income. There is a lease payment and there is a closing balance, right? There is a lease payment and there is a closing balance. Right, you can see here instead of 1,25,000, you need to pay, you need to receive 50,000 also, which is unguaranteed residual value. This has become a zero. This has become zero, right? This has become zero. Is that clear? Is that clear, friends? Or if you want to split this, let me show you in this way. At the end of fourth year, there is another payment also, which is 50,000, which is 50,000. Right? At the same time, there is a 50,000 also. This is lease installment. installment, and this is unguaranteed residual value, or this is, I can say, lease payment and unguaranteed residual value, right? What is the subsequent accounting? What is the accounting on the reporting date? What accounting will happen? So two things will happen. Number one, you have to recognize an interest income, and lessor has to receive the payment. Lessee has to make the payment, right? Let me show you the entire 4-year lease accounting. Entire 4-year lease accounting. Let me show you that thing, right? So accounting entries, accounting entries along with impact, right? Particulars, year 1, year 2, year 3, year 4. First entry, finance lease receivable account debit, receivable account debit to interest income. This will go to the P&L, and by this entry, your finance lease receivable balance will go up, right? In the year 1, what is your interest? 43,038 is your interest in the year 1. Second entry in the year 1, the lessor will receive the rent, bank account debit to, with this, your finance lease receivable balance will go down. You will credit the asset to finance lease receivable credit, right? By how much amount? By 1,25,000. By 1,25,000, right? Second year, second year, you will again recognize an interest income of 34,000. You will debit your asset, and again, when you will pay, sorry, when you will receive, you will credit your assets. You will credit your assets, right? In the third year, you will again recognize an interest income. Okay, you will debit your asset, and when you receive the payment, you will credit your asset, right? In the fourth year, again you will recognize an interest income. Okay, and in the fourth year, you will receive your 1,25,000 as a lease payment and 50,000 as an unguaranteed residual value. With this, you will credit your finance lease receivable. Outstanding balance, outstanding balance, outstanding balance at the end of year 1 is 348, year 2 258, year 3 159, right? Year 4 it is 0. Year 4 it will be 0. I hope you have understood this accounting of finance lease receivable, right? How I have created a finance lease receivable. If you have any question or you need any explanation, I would be happy to answer the question. Yedu Kondalu has said, sir, unearned finance income is equal to gross investment minus net investment. You are right. You are right. The difference between the present value of the gross investment and the gross investment is known as unearned finance income. Is known as unearned finance income. I hope it is clear to all of you guys. I hope it is clear. I hope this accounting is clear to all of you, friends. Is that clear or not clear? Do I need to explain any concept further? Do I need to explain any concept further? Please do let me know. If I need to explain any concept further. No? Okay. And now let's go back to the one of the new concept, which is exemption. Exemption to the lease accounting in the books of the lessee. What are the exemption which is given? Let me take you to the exemption to the lease accounting in the books of the lessee. Right? Friends, sorry. Exemption to the lease accounting in the books of the lessee. So we have understood the finance lease accounting and operating lease accounting in the books of the lessor. In the books of the lessor, if there is a operating lease accounting, the asset accounting will go as it is like PPE, and the lease rental has to be recognized as an income over the over the uh, over the lease period on a straight line basis, right? If there is a difference between the amount which is received and the income which is accrued, the difference will go as a lease equalization asset, right? So this example we have also seen, and this difference will arise only when there is a escalation in the lease contract. Number two, in case of a finance lease, if it is a finance lease classification, the lessor has to de-recognize the asset, and the lessor has to recognize the present value of the lease receivable, the present value of the future amount which is getting received by the lessor as a finance lease receivable. So what is the future amount which is likely to be received by the lessor? Number one, it is a lease payment over the lease term plus unguaranteed residual value. This finance lease receivable has to be compounded with the interest income, with the finance income, and to be deducted by the amount which is received by the lessor as a lease rental every year or every month, right? This is the lessor accounting, what we have discussed and what we have understood. Now, friends, in the standard, so we all have understood that this kind of lessee accounting, which is creation of right of use asset, lease liability, this kind of accounting was not there in the old Ind AS or in the accounting standard also. This was a new accounting which was given in the books of the lessee. Now, friends, one of the question which was arises at the time of drafting of Ind AS 116, the question was, sir, normally whatever this right of use asset you are creating, right? You are depreciating this right of use asset over the lease term. What happens for the short-term leases? Short-term leases means, for example, the companies are taking so many leases on a short-term basis. For example, if you go to Mumbai, in Mumbai, the property leases are also happening for 11 months, right? Or, for example, today, the company need a car, right? And the company has entered into a car lease for, let's say, 10 months only 10 months, not for 2 year, 3 year, 4 year. So the question was arises, if the company is entering into a lease for a very smaller point of, for a very smaller period of time, say up to 12 months, which is 12 month or less, right? Which is a year or less, whether the company is still required to do all this complex calculation. For example, the company needs to create a right of use asset on the basis of present value, then the company needs to create a lease liability, then the company needs to charge a depreciation, then the company needs to charge a finance cost. And even in case of a short-term leases, which is defined as up to 12 months, which is defined as 12 months or less, even the time value of the money would not be material. Time value of the money would not be material, right? So friends, so when this standard was under drafting, so this debate was happened, and globally, because we all are aware that Ind AS are the converged version of IFRS applicable to India. So this was very well debated, and in the standard one exemption was given. The exemption was given that a lessee can avail the exemption, and this is exemption, this is not a rule, this is an exemption. If the lessee wants to avail this short term leases exemption, right? What is a short term leases exemption? Short term leases exemption means if the lessee is entering into a lease contract for a period of 12 months or less, the lessee can avail the lease exemption relating to the short term leases, and in that case the lessee is not required to do the right of use asset and lease liability accounting. Sir, then lessee has to do what accounting? In that case, the lessee has to do the old lease accounting. Sir, what is the old lease accounting? For example, the lessee has entered into a lease agreement for a car for 10 months, or let's say for 12 months. So the lessee is paying a lease rental of rupees 10,000 every month, right? Ideally, the lessee needs to create a right of use asset and the lease liability on the commencement date. The lessee need to charge depreciation. He has to pass in monthly entry or let's say yearly entry for depreciation and finance cost and then lease payment, right? So instead of doing all this stuff, asset and liability accounting, the lessee can, if the lessee wants to avail this exemption, the lessee can simply do the car lease rental expense account debit to bank account. Car lease rental expense account debit to bank account 10,000 rupees every month. This is the simple accounting which lessee can do, which lessee can recognize in its books of accounts. Very simple rental expense accounting, right? This short-term leases accounting is only applicable to the lease term of 12 months or less, right? A lease that contains a purchase option is not a short-term lease. Sir, let's say if this is a 10-month or 12-month of a lease contract, let's say a lessee has entered into a lease contract for 12 months and there is a right to purchase option is also given in the lease contract. What does it mean? If the right to purchase option is also given in the lease contract, it means, and if of course the lessee is reasonably certain that he will avail the purchase option, then you remember your lease payment not only includes the lease rentals, it also includes the exercise price of the purchase option. It means although it is a short-term lease of 12 months only, but if the purchase option is available, it means the asset will remain with the lessee for a longer period of time. In that case, if a lease which contains a purchase option, this exemption is not available for that lease contract. The election shall be made by class of underlying asset to which the right to use relates. Sir, let's say if I want to avail this exemption, right? Let's say car. I have 5 cars which I have taken on a lease basis, right? And the lease term of these cars are, let's say, 10 months, 11 months, and 12 months. Okay, these are the 5 cars. 2 cars are on 10 months, 2 cars are on 11 months, and 1 car is 12 months. Sir, if I want to avail the exemption relating to the lease of, let's say, 1 car, okay, or 2 car, and for the remaining car, I want to do this right of use asset and leasehold liability accounting, for example. The standard says no. If you want to avail the exemption, it has to be availed by class of asset. Means if you want to avail the exemption for 1 car lease, then you need to avail the exemption for all the car lease, right? Sir, for example, I have a car lease for 12 months. I have a building lease for 12 months. 2 leases are there, car lease and building lease. Both the leases are short-term leases. Sir, I want to avail the exemption on the car lease. Means I don't want to create right of use asset and lease liability on car lease. But I don't want to avail the exemption on the building lease. For the building lease, I want to create a right of use asset and lease liability. Sir, can I do this? Answer is yes. So 3 things you need to remember. If there is a short-term lease, means a lease term is 12 months or less, right? In that case, the exemption can be availed. Means only expense to bank accounting is good enough. Number 2, if the lease contains a purchase option, then this exemption cannot be availed. Number 3, The election of this exemption means whether you will avail or you will not avail, it has to be by class of underlying asset. It has to be by class of asset, right? It is not, it is not allowed if you will do a cherry pick within that class. For example, in case of a car lease, if there are 5 cars, you cannot say that for 3 cars I'm availing the exemption, for 2 car I am creating this right of use asset and lease liability accounting. It is not allowed, right? Is that clear? These are the 3 things. Sir, now I am giving you one scenario. You remember lease term I have discussed, and when I discussed lease term, it consists of 4 parts: non-cancelable period plus rent-free period plus optional renewal period if lessee is reasonably certain to renew plus optional termination period if lessee is reasonably certain not to terminate. You remember 4 aspects I have discussed at length. So let's say a lessee has taken a car lease on a rental basis for 10 months. There is a renewal option which is available for 6 months. And at the commencement of the contract, lessee is reasonably certain that he is going to avail the renewal option of 6 months. Now, friends, you need to tell me what is the total lease term and whether the lessee can avail the short-term lease exemption or not. Please tell me quickly. The lessee has entered into a lease contract for 10 months with renewal option of 6 months, right? Lessee is reasonably certain that he is going to avail the renewal option. So my question is, what is the total lease term? Question number 1. Question number 2, whether lessee can avail this short-term lease exemption. Rahul is saying the total lease term is 16 months. 16 months. 16 months means more than 12 months. Okay. Okay. Abdul is also saying, sir, it is 16 months and cannot claim exemption. Neha is also saying, sir, it is more than 12 months and it cannot claim exemption. Very good, friends. So, friends, whenever you are solving the problem of this standard, you have to think connected. Lease term. Whenever there is a lease term, you have to understand what is the meaning of lease term you have understood. What is the meaning of lease payment which you have understood, right? So it is not in isolation, it is well connected. So in this case, it's 16 months and hence the exemption cannot be availed, because exemption can be availed only for those leases where the lease period is up to 12 months. So let's discuss this question. And you need to tell me quickly. A lessee enters into a lease with a 9-month non-cancelable term with an option to extend the lease for 4 months. Right? A lessee enters into lease with a 9-month non-cancelable term. So non-cancelable period is 9 months. There is an optional renewal period of 4 months. 9 plus 4, 13. But let's discuss further. The lease does not have a purchase option. So purchase option is not there. That is very much clear. At the commencement date of the lease, the lessee is reasonably certain that he will exercise the extension option because the monthly lease payment during the extension period are significantly below market rates. Whether the lessee can take a short-term exemption in accordance with Ind AS 116, you can answer this question very quickly. Yes, Yedu Kondalu has told it is not a short-term lease. You are right. It is not a short-term lease, so exemption cannot be availed. Assume the same fact as scenario A, except at the lease commencement date, the lessee is not reasonably certain to exercise the extension option because the monthly lease payment during the optional period, extension period, are at what the lessee expects to be the market rate. It is on the market rate only. And there are no other factor that would make exercise of renewal option reasonably certain. In the second case, on the basis of the same facts, the lessee said that there is no reasonable certainty to avail the renewal period. There is no reasonable certainty. So in the first case, the lease term is 13 months. In the second case, the lease term is 9 months only. So can the exemption be availed in the second case? Answer is yes, because it is less than 12 months. Because it is less than 12 months. Right? So friends, today we have discussed the lease modification accounting. Today we have discussed the lessor accounting. I mean to say accounting in the books of the lessor in case of operating lease and finance lease. And today we have also discussed the exemption in the books of the lessee with respect to short-term leases. In the next class, day after tomorrow, we will be discussing the second exemption, which is low value leases, and we will be discussing the sublease concept and sale and lease back transaction, right? These two and a half concept we will be discussing in the next class, right? If you have any question, friend, please do let me know. If you have any question, I would be happy to answer, right? I'll take a pause for the next 30 seconds. If you have any question, I would be answering that query. Otherwise, I will be happy to conclude the session for the day. Any question? Any question, friend? Neha has given her response that everything is well understood. Thank you so much, Neha. Glad that you have understood everything. Rahul has also confirmed. What about others, friend? Shall I call out the day? Shall I conclude the session? Okay, so let's conclude the session. Abdul has also confirmed. So thank you very much, students. So day after tomorrow, that will be the fifth day on Ind AS 116. And on the fifth day, we will be completing Ind AS 116. So I would request each one of you that if you have any question relating to the last 4 classes, please ready with your question on the day 5, which is day after tomorrow. I would be happy to answer the question from any part of Ind AS 116. Thank you so much. Stay safe, stay happy. Bye-bye. Take care.